Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Wanted to come to you today with a bit of a new video, largely because I've been getting a lot of inbound about the imminent collapse of the US dollar. That basically the United States economy is in shambles. There are all of these other countries that would prefer to not do business in US dollars. And that's going to mean that we will lose our status as the world reserve currency. And then generally after that, people go into sort of wailing and gnashing of teeth about what that exactly means. And I will say, there is some amount of this narrative that is believable in the sense that, we have talked previously about when Russia invaded Ukraine. The U.S. basically weaponized the dollar by seizing, essentially Russian foreign reserves and doing some things with the currency that the Russians didn't particularly like. There were a number of countries at that time that I would call sort of frenemies with the United States, like India as a fantastic example, China as an example. They basically said, "Hey, wait a minute. The U.S. controls the dollar, or at least in some way, shape, or form, controls the dollar. And so, if we hold our reserve currencies in the dollar, that's problematic." And then, just recently, with this sort of spate of tension between Europe and the United States, some additional concern of like, well, if Europe didn't want to use the dollar, like what would that largely mean? And so I understand a little bit where some of this is coming from. I hear things about, foreign countries using gold, or foreign countries using petrodollars, or foreign countries using a whole lot of different things, stable coins, etc. And I just want to address a little bit of that, put some fears to rest. First, I would just note that there is absolutely nothing that we see in any of the data that would suggest that the US currency is in any type of material, meaningful decline. Still, about 60% of foreign currency reserves are held in US dollars. That number has been relatively stable over time. It increased a little bit in the early part of the 2000s and then has decreased a little bit towards the end. But once again, nothing that would suggest that we're just, hemorrhaging assets out there. Our share in the dollar share in international payments is actually rising over the past several years. So more and more international transactions actually being denominated in dollars as opposed to anything else. And our share of dollar denominated assets and liabilities in the international banking system is quite stable. So, a lot of the time when foreign banks decide how they're going to mark their assets and their liabilities, they don't necessarily do so in their own local currency. They do so in the dollar because the dollar is generally seen as stable. And I would also just note, and we're going to come back to this a little bit at the end of the video, because I do think that a lot of the time, the people that are trying to sell this narrative are also trying to sell something else along with it. We'll come back to that. But I will note, a lot of people will point to the rising share of gold in foreign currency reserves and say, hey, this is because countries are just shifting all of their reserves to gold away from dollars. Most of that is actually done based on a value of the gold that they hold. And since gold is up about 200% over the past couple of years, it dramatically inflates the percentage of gold as an FX reserve holding, despite the fact that these countries aren't actually stockpiling away more and more ounces of the metal. It's more just that the price of gold rose, which is kind of a silly argument if you were to ask me, and I think may speak a little bit to I think there are some people out there that are feeding people lines about why they should get scared and giving sort of bad data to support that. I also just want to note how bogus this chart is. If you look at the actual volume of gold that international countries hold as part of their Forex reserves, it hasn't changed that much. The value of that gold has changed dramatically, but the actual volume of it has not. I also just want to step back for a second and from a history perspective say, even if the United States were to lose its status as the world's reserve currency, I guess I would just ask everybody to take a step back and say, okay, well, what is really the harm in that? All right. I would look at, in the 1940s, the United States was not the world's reserve currency. It was the British pound. We moved from the British pound to the dollar. And I will tell you that Britain didn't actually suffer all that much as a result of that. I've been to London recently. It was fine. I will also just note that there are plenty of countries around the world that are not the world's reserve currency. So, Britain, as an example, the entire Eurozone, Australia, South Africa, Japan, Switzerland, all of these places are places that have stable currencies that are not the world's reserve currency. And all of those countries do just fine when it comes to economics. Once again, I was in Paris about a year ago, and I will tell you that they do not seem to care that much that the euro is not the world's reserve currency. Certainly, it would mean some changes in the way that the dollar might behave with respect to economic cycles, but those changes are navigable. The second thing that I would say is there is really no other alternative to the dollar. And so I'm not exactly sure why we're scared of it. Every other alternative that's out there either is in friendly hands. The biggest alternative would probably be the euro. That is in relatively friendly hands. And then everything else that's out there, anybody who's worried about the United States having control over would also be even more worried about having Russia or China or Brazil or Venezuela or one of these other countries have control over. Typically, since the United States is viewed as having rule of law and being a relatively stable country politically, that lends a lot of strength to our dollar. So I will just say, I'm not sure exactly what the harm would be, even if we lost it. And if we did, and I just don't see the path to that happening. I'd also lastly just note this is why we diversify portfolios, right? This is why we hold a mix of foreign assets. It is why we hold a mix of fixed income securities. It is why we have inflation hedges inside the portfolios. We always want to make sure that we have a broad diversity of asset exposure. But I will note, if you're watching this video, it is likely that you are sitting in the United States right now. We don't get a lot of business from overseas. And I will also just note that that means that all of your liabilities are denominated in US dollars, which means thinking about having all of your assets denominated in euros and all of your liabilities denominated in dollars is typically a problem. One of the reasons why we recommend that, regardless of what country you're in, you have a lot of asset liability matchup in terms of the currency exposure is just so that you don't have something where, let's say, the dollar appreciates as it did last Friday. Now, all of a sudden, the value of my liabilities has gone up. The value of my assets hasn't changed. And that mismatch can create problems from a financial planning perspective. So it really is important when we think about your overall exposure that you think about, well, what currency do I buy gas with? And what currency do I pay my rent with or my car payment with? Because if that's the currency that I pay all my bills in, most of my assets should probably be denominated in that as well, so that I have a nice matchup between those two. The last thing that I will say on this point, and will echo something that we said earlier in the video, is whenever you get someone that is sending you this information, and by the way, I almost never see this information on a Fox Business or a CNBC or something else like that. It's normally always coming from something like a Zero Hedge or one of these other newsletters that's out there. I just remind you that the purveyors of that information get paid on advertising. They get paid because someone is advertising in their particular periodical, whether it's a pop-up ad or a little ad in their newsletter, or even just your own personal information, which by going to the website you give to them so that then you can receive targeted advertising in the future. And what I find is that fear is very easy to sell. It is not hard to sell people fear. It is not hard to scare people. And so typically what will happen is, one of these newspapers will write an article about how the world is about to end and the dollar is about to collapse and this and that and whatever else is going on. And then subsequently, you'll get advertisements for gold or for silver or for some other sort of hedge safe haven asset that someone is trying to get you to buy. And the idea is I sell you the fear, and then I also sell you the solution behind it. I just encourage you, whenever you look at this stuff, to try and maintain as open a mind as you possibly can, and understand the motivations of the people that are providing you with that information. Because if it's coming to you from some sort of, news outlet, etc., that is supported by advertising, they almost always have some sort of axe to grind in terms of perpetuating their own business or supporting whoever it is that advertises within that publication. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a fantastic day, and I look forward to talking to you again soon.